Hi, welcome to the Ask Dr. Wealth series. I'm Alvin, the founder of Dr. Wealth. And of course, Warren Buffett is the world's most famous investors, and a lot of people want to emulate his investing style. And there are many books written about Warren Buffett, and everyone seems to have a version of how he actually invests. And Warren Buffett has never really stated very explicitly, although he does review some of his thought processes in his annual letters. And a few years ago, a group of researchers started to break down Warren Buffett's investing source of alpha, okay? And they termed this paper called Buffett's Alpha. It was written by this group of people, Frazzini, Kabila, and Patterson, okay? It's a handful, remember, right? But that's the purpose of this video. I'm going to explain to you the gist of the research itself. So there are scientific ways or through data, they are able to break down what kind of characteristics of stocks does Warren Buffett buy. And essentially, they discovered there are two main kind of factors that Warren Buffett stocks tend to exhibit certain characteristics. One is they tend to have low beta. So low beta, what it essentially means is that the stock prices movement doesn't really correlate to the broader index. So for example, Warren Buffett, if he buys the US stocks, right, they may not correlate so much to the S&P 500 index, okay, in that sense, okay? So they tend to find that they are not so correlated, and you can also say in other ways that they tend to be low volatility stocks. That means they don't fluctuate so much. So they're very stable stocks that Warren Buffett chooses. And the second one is that they tend to be of higher quality. That means they're very profitable and they have growth elements in them. That means their profits grow over time. So these two kind of characteristics are pretty much what most people understand, especially the second one, high quality stocks, right? The first one maybe less so, okay, in terms of the correlation to the index. And the more important thing is that if, let's say, Warren Buffett buy this kind of high quality stable stocks, which also mean that these prices of the stocks that he owns may not go up a lot because they fluctuate lesser, right? Okay, what they found on top of these two characteristics is that Warren Buffett is levered, has a leveraged portfolio. He actually levered around 1.6 times of his portfolio value. Okay, so imagine that his wealth without that leverage would have grown according to like what this white line hypothetically say. But if let's say he levered this portfolio by taking financing and buying bigger portion of the stocks, and by 1.6 times, it will probably follow a much higher, but of course more volatile path of the wealth growing phase. Okay, so which means leverage is a very key factor to Warren Buffett's wealth. And how does he get the leverage? You know that in history, he buys some of these insurance companies. Okay, like one of them, the most famous ones, is Geico. Okay. So insurance company, they sell policies and they collect premiums from their consumers, from their customers, and these premiums are cash, which means these insurance companies gather a lot of cash every month. And what do they do with this money? They either go and invest or they lend it out, buy bonds, and that's how they generate returns for the customers. And once in a while, they have to pay out certain amount to those people who claim the insurances. But most of the time, this insurance company has a lot of money. And what Warren Buffett did was that he borrowed money from this against this float of the insurance company. And what's more amazing is that he borrowed at an interest rate that is lower than the treasury bill of the United States government, which means Warren Buffett has been borrowing money cheaper than the AAA US government, which means people see all Geico companies, like insurance companies, see Warren Buffett as more creditworthy than the US government, in essence, right? So these are some of the key elements, and by being able to borrow at a very cheap rate, the cost of capital is very low for him, which means the spread of the investment returns from the stock and the fee that you need to pay in terms of the interest rate is low, the spread is going to be very large for him. And that's how some of these key elements resulted him to a great success when it comes to building his own wealth, okay, through investing, which we believe that most people would not be able to borrow at these kind of rates as a retail guy. So which means some of the Warren Buffett strategies or characteristics that he has is very unique to him, and it may not be so worthwhile for an individual to really copy what he does. So I hope that by using this study by itself, Buffett Self-Help, you can actually go and download the paper and read in more detail. And you actually break down how Warren Buffett achieved his success and put it in context and see whether you are also in the same situation to adopt these kind of things, which I believe most people won't. Most people are not in this situation. Okay, so thank you for watching. I hope it has been an enlightening session for you guys.